Today, we're going to understand phases in Dubai real estate because a lot of investors ask me, Zohaib, I see a lot of primary market. Why is the primary market more expensive than the secondary market? Now, to answer this question, you need to understand the history of Dubai. So let me explain to you the phases in Dubai real estate, and I'll sort of make a graph for you to understand as well. So the first phase is 2004 to 2007. So this was the big boom. So I was here in 2002 where properties were offered to me and my family, where we were getting offered properties in Emirates Hills. Meadows to be specific, we offered between 350 and 400,000 dirhams. But today the property value is 5 million. Did I take the investment? No. Why? I didn't believe. So here the problem was, see, you must give fair opportunity to Dubai. Dubai is a young market. You cannot compare with complex old markets like the US, like UK, London. It's a very stable. Things are changing now. The world has changed. You'll understand this as I progress throughout my video. So in 2004, 2007, it was a speculator's market. Why? You could book a property paying 5%. And there was no cap. For example, right now, developers have a cap. Okay, you have to pay 40%. And big developers have made it really hard. The payment plans are not easy anymore. Only investors with a certain investment capacity can invest, take advantage of off-plan, and then when it reaches completion, they take advantage of the risk that they've taken, they bear their profits, and an investor takes it. But in this case, because you just had to pay 5%, it was phenomenal. You stand in a line, you pay 5%, you book a property, you go back in the line, you sell it. And so people make phenomenal profit. So an investor who could own one property, who had the capacity to buy one, he ended up buying 10. Then he got greedy. He ended up buying 20 properties. And when the market crashed in 2009, this phenomenon caused the crash because of speculation. So clearly, of course, the whole world faced a massive recession, but Dubai took a serious hit majorly because of traders and speculation, and there were no checks in place. So 2009, the whole world went back sort of into the dark ages where the market crashed. So I will draw a graph later. But then 2013 to 2015, we saw a spike again. Why? Because it's in this phase that the escrow accounts came into place. And RERA became extremely strong, which retains to date. The Dubai RERA stands for Real Estate Regulatory Authority. It's an independent board, extremely fast. So for example, if a landlord faces an issue with a tenant, vice versa, you have any litigation claim against a developer, these are the people. That's why I keep recommending my investors, please do get your Okud from developers. This is the most important document. You have this document, it is your insurance, it's your safety net. So when this came into place, a lot of developers, private developers who had bad intentions, who did not have intentions to actually deliver business. In any market, you will have crooks, right? So there were crooks in the market who ran away. So what happened? Dubai was left with a lot of developments that were 50% complete, 60% complete, 30% complete. Now here you must understand the demographics. Now in this phase, in this era, there was a mild spike. The major demographic of investors were India, Pakistan, Saudi, UAE, and then it was a lot of Indians and Pakistanis based in UK, Canada. These were your major investors. Plus, of course, you had a lot of Iran as well. During this phase, it was a lot of Iran, Afghanistan, Russia, India, Pakistan. These were UAE. A lot of players were in this market. It's important to understand the shift of demographics by the time we reach present day. So, but this was the major demographics of this area, considering the geographical position of Dubai, because these are our neighboring countries. It made complete political sense for them. And you understand the tax business, the people who understand, who know, they know as to why there's a requirement of investment, heavy investment in certain areas. 2013 to 2015. So what happened is, so a group of these investors, they found advantage when escrow was built. They started picking up the stock in bulk. They started picking up all these underdeveloped projects. They completed it, finished it, and the market really started picking. I was with a company that was making 200 million dirhams a month, purely based on understanding demand and supply. That's it. For example, when we were investing in JVC in 2013, the plot price was 65 dirham per square foot. So a group of investors from Indians and Pakistanis together, we picked up 10 plots, 12 plots. And then we kept calling the agents and saying, hi, we're looking for more property, we're looking for more plots. It increased the demand, the prices increased. Single-handedly, we increased the price from 65 dirham per square foot to 105 dirham per square foot. We're solely trading on G+4 and G+2 plots. It's an example why it's very critical to understand the demand and supply chain for any product to trade. So, and then we were one of the pioneers to initiate a payment plan. So we started payment plan in Dubai Silicon Oasis. So there was a developer called Gulf General Investment Corporation, again a government body called GGCO. So we picked up they had some, we restructured their debt. So how it was, let's say there were these buildings called Axis 1 to 8, there were 8 buildings. The prices of one bed were around 500,000 dirhams. So for the first time, we made a 60-40 payment plan. We pay 60%, move into the property. These are already a problem. Move into the property, pay it in 3 years' time. The rents were around 60,000 dirham per annum. So for investors, it was, we sold 8 buildings in 2 months because it was a phenomenal opportunity. You pay around 240,000 dirhams, move into a property, or rent it out, get 60,000 dirhams, and it just made complete sense. All those investors till date are extremely happy with their decision. So this is an example of how business moved in 2013. And hence, people say that today the market prices have not increased. It's just a correction, because during this golden phase at 2014, if you do some due diligence, the prices today are at the same rate as 2014. That's the reason why. Now, we had a funny phase during 2015 to 2021. Now, this was a phase. Now, you must understand, now I'm from India. India, Pakistan, these are big countries, heavily populated, right? Right now, I think they even beat China in population. So there was a situation where people used to consider US, UK, Europe as the destinations. Dubai was a stop-by destination. It was that temporary destination where you stay 3 to 5 years and your dream was to go to America, or the UK, London, and that was the dream. Every average third world country, whether it's India, Pakistan, Bangladesh, Sri Lanka, any of these countries, and this was the dream. They stop by. It's easier from Dubai, head over to Canada, UK, US. This was the dream. So nobody took Dubai seriously during this phase. So during this phase, a lot of people are like, okay, Expo's coming in 2020. All the countries who have invested in Expo, they've always crushed. So it's just a bubble. Do not invest in Dubai. The market's going to crash. What happened is, because there was a market slowdown, so now it's time to understand the graph, because post this is the interesting part, right? So as of now, we understand the graph, right? So it was going really high till about 2009. Then there was a massive crash. Then we climbed up again during 2013 to 15, and then since then it's been a little stable towards the lower side, right? This is how the graph have been going. So what happened during this phase is that Dubai was like, okay, there is this massive population is living in Dubai who work. Let's target the people with a salary between 15,000 AED to 25,000 AED. Hence, we started coming up with a lot. For the first time, Emaar was launching townhouses starting at 1.1 million dirhams. We saw Eden in the valley. We saw Nishama town square sell starting at 950,000 dirhams. Because why? We were targeting these communities. Whole Danube, 1% a month. We saw Al Khail Gate. So because Dubai real estate was always an affair of the rich. So in any country, you will find a very similar sort of demographic where you will find like, okay, let's say there's 30% who are the rich, there's like a 30% who are the rich middle class, and then you have the 40% who let's say cannot afford a property. So they started targeting sort of this segment. This segment had given up on Dubai. So we're targeting sort of half of this segment and this segment. So a lot of communities came up: Demak, Koya, Nashama, Town Square, Valley, the Eden in Valley. Some projects were scratched out. That is why these communities started coming into play, and now probably you'll never see such communities coming back again, because what happened? The golden era started coming in, right? Now, how did the golden era occur? So now in 2021 onwards, now these are the series of events that happened. One, of course, you have the wonderful COVID time. But what happened during COVID? Countries like UK, Europe, this is what happened. In countries like UK and Europe, they couldn't handle the restrictions. So the businessmen decided, okay, where can we fly out? You know, someplace like Monaco, South France, where you can live in peace and just have a good time and work. So you'd be surprised, Atlantis was full during COVID in Dubai because people are having the time of their lives. Because the country took really quick care in taking care of business. So COVID was one factor that people started coming to Dubai. Factor number two, we had crypto. So what happened is, especially when Binance opened its headquarters, it was a very big news. So now this is one advantage of Dubai. Dubai, whether it's AI, it's aerospace, sustainable energy, Dubai is always ahead in what people are. When a country is even thinking about something, Dubai is already at it. Flying cabs, boom, it's right there. Flying helicopters, boom, we're there. Sustainable energy, boom, we're there. So crypto, all real estate developers actually understood it's the future, boom, it's there. It was such a big pull because rich people don't like banks. They don't like banks controlling their money, and even if they try to withdraw a certain amount of money, they get stuck. So sorry for the break, I had a call come in. So okay, so crypto was a big factor. Rich people don't like banks, so they were very happy. And you know, after I started handling crypto transactions, it all made sense. You know, the transactions were seamless. It was so efficient and transparent. Then third factor, of course, the Russian invasion. This gave developers in Dubai billions. Shoba, Demak, Ellington, Ema, you know, the big developers, they took a killing out of it. I couldn't take any advantage because the only Russian I know is Da. And I tried saying da, but it didn't work out, you know, so okay, it's all right. But help Dubai, happy with that. So 4 is funny. Now there's an entire shift of world order. So I'm going to put it as change in world order. So what's happening? BRICS is going up and the US is going down. It's simple as that. Okay. So and plus, of course, there's this entire UK Europe situation which we're all aware. And what is it all? It's all revolving around safety. That's it. It's actually in a funny way. It's safety. People just want normalcy. They want a safe, easy place to live. Dubai is a capitalist economy. It is the place for the rich, HNIs, ultra HNIs, who are happy to live a life with good standard, absolute safety. Because yes, there is no violence in Dubai. It's extremely safe. Hence, now I'm going to now talk about the change. So now the kind of investors who I face in a normal day, let's say the new demographic, okay? Because Americans, it's hard, right? Americans, they still have to pay 50% tax, even if they're flying to Dubai, unless they denounce their citizenship, which also is occurring, but I'm just giving you sort of a change of demographic. So the kind of investors, so we are Dubai here, DXB. We are finding people from US, not just US, from South America, from UK, Europe, heavily, from Australia, Hong Kong, from Japan, from Singapore. Now it's funny as to why these people are. So the people from Singapore and Hong Kong, they believe in the entire casino theory, that casino is a moonshot, and they like the way Dubai is developing. So Indonesia, a lot of Indonesians who, so these are some of the new investors. Japan is coming with big investment funds. UK and Europe, they just don't like living there anymore, and so they're moving to Dubai. US, again, a lot of violence, changes, nothing is changing, a lot of debt increasing. So they're investing in Dubai. It's crazy how much these are complete new investors. So last time when I checked the demographics, for the first time it was US, UK, Netherlands. I mean, can you imagine? Netherlands was one of the top 5 investors in the region. So there's been a huge shift in demographic, and these people are not investors, they're end users. For the first time, we're not looking at 80% investors. We are looking at a 60-40 demographic where around 60% are end users. So it's now 60-40, where 40 are investors and 60% are end users who want to live here in the country. So, and there's constantly a shift. Now people have started planning, okay, I want to plan my relocation to Dubai. And this is what's happening from across the world. I miss China. I'm so sorry. I'm extremely sorry I miss China. But China is coming as well. And when the Marjan Island casino comes, boy, that is the moonshot. Why? Singapore is at $12,000 per square foot. We are at $1,000 per square foot, and this is downtown Dubai. So it makes complete sense for investors. So when I talk to a Singaporean investor there, and I say, you can invest in Burj Khalifa for $1,000 per square foot, he's like, Zohaib, that is cheap. That is so cheap. I'm like, yeah, so let's do it. So that's how business works. So I hope that you enjoyed this video. I enjoyed making it because this really helps me explain to investors why. So why? Because now developers have to make high quality products. We didn't expect all these ultra HNIs from all these regions to come to Dubai. We don't have stock for them. 80% of the products in Dubai Marina are not the best. 80% of Emirates Hills, 80% of Palm Jumeirah, the investors are not happy. They want modern European houses. We don't have that kind of housing. We have a shortage of luxury housing. So now what all the developers working on, top high-end quality products for the HNIs, ultra HNIs investors who are moving down to Dubai. Hence, there's a major shift in the demographic, and that is why you'll find there's a difference in pricing, because you cannot compare these products. These products are high-end. They're going to be floor-to-ceiling windows, infinity pools, phenomenal amenities. The quality of construction is going to be different. So there is a major shift in the demographic, and people who are watching this video, you must understand, Dubai is just beginning. So if you think you've missed the bus, think again, because now we still are at $1,000 per square foot. Guys, India is more expensive than this. Mumbai is more expensive than this. So don't miss this opportunity. Understand where Dubai is heading. So I'm going to make a video on where Dubai is heading. I just made a video yesterday. I made a video on Golden Belt. Today, the government has announced they're increasing the beach area from 35 kilometers to 105 kilometers. So this is why I constantly study the government, understand the different locations in Dubai. So this is downtown. I apologize. This is Dubai Marina. This is the Palm. So don't stick to the conventional locations. Understand where the government is heading, and based on which there are locations that you don't know of where the government is heavily investing. 6.5 billion in just one community over here, almost 7.8 billion in a community over here, almost 3.5 billion in a community over here. Understand these communities, understand the infrastructure, understand the sorry, I got distracted. Okay, so understand where the government is investing, so and then make an informed decision. Right location, right price per square foot, make your Excel sheet, and